The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and tax season may be over, but not to us. And you know, especially if you're getting love letters or identity theft letters or those kind of things, you want somebody to talk to, and we want to help you. And, of course, I'm joined in studio with Christopher Fabian. Hey, Christopher.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey there. How's it going? Happy Saturday to you.
Happy Saturday to you. And, it's
what's
exactly
wrong? What's wrong?
I was going to ask Esther the most important question of the day.
What?
Do you got your hat ready for tonight?
Oh, you know, I would love to go to the convention.
And happy Mother's
I
Day.
really would. I think just to have the hat, I would have spent $100 on a hat. But unfortunately, and you know, I mean, is there anything more beautiful than a horse?
Oh my gosh.
I mean, horses are just so majestic. But
They
no,
are
I'm not doing mint juleps, and I don't have a hat. But I will watch the race.
You've gone to what was the race that you did?
I went
go
to Saratoga.
Saratoga. You had a great time, didn't you?
And I had a hat on that day, but it wasn't the same.
Yeah.
You know, anyway, but for those of us that know, once tax season's over, the next part is kind of like your 50,000-mile checkup. You want to make sure that everything that was supposed to happen did happen, and we want to make sure that if you're somebody that is kind of been disappointed, you haven't gotten your refund for 2023, 2022, maybe 2021, we want to help you. Our phone number at studio is 803-0930. 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. We certainly want to help. But here's the first thing. If you file, I was just on the phone for hours.
I heard that you were on the phone for hours.
And this gentleman was a victim of identity theft, and then they said, you know, because it was identity theft, he had to send in a paper return, which he did for 2021, but that was right in the middle of COVID. And so after hours and hours and hours of being on the phone, we finally got somebody, and by the way, we got hung up on twice, who said, I'll just tell you the truth, we don't have the return.
Oh my gosh.
And so I said, and so let's face it, remember when they had those big tractor trailer full of
that they
envelopes?
shredded.
Right, and I think that's what must have happened to his return, so we resubmitted it. So if you had a paper return and they're saying they haven't processed it and you've been calling and calling and calling, it doesn't hurt to resubmit.
No, it's
So
a really good idea.
they signed it again. We sent it registered mail, return receipt requested, so that we can prove that it was done. But it is very frustrating, and if you have no patience, you are not going to like dealing with the IRS. You have to have patience.
Yeah, I know. I had it was one of your clients. I helped with the IRS. They did for 2022 a direct debit out of their account to pay them the money in 2023 for the 22 return, and she got a bill saying
You never paid.
So we got them on the phone, and they go, "Oh, it just got fixed. We just saw that." It took a year to fix it. That was a little strange.
But I will say, you know, because of COVID, they were way short-staffed. And so if you're somebody and we just saw a client yesterday that got a bill for $10,000 for a not-for-profit from 2016.
Yep.
You know, I mean, they're now just kind of rolling out the stuff. And if you need help, we want to help you. EG Tax is there for you. Our website is egtax.com. We certainly want to help. So if you send in a paper return and it hasn't been processed, it doesn't hurt to send it in again.
Right.
No.
Now, electronic returns you can only submit once.
Correct. Yes.
All right, and then the other thing that we're really what's so important is that beneficial owner information through FinCEN. You want to make sure that if you have a small business, which would be 1120S partnership, a limited liability company, you want to make sure that before, especially if it's a pre-2024 business, you want to get that beneficial ownership information submitted to the Financial Crimes Network of the Internal Revenue Service. Sounds like fun, because the fine can be $10,000.
Yeah, and that's really, really important. We should almost go over that again. But I wanted, after we go over that again, I wanted Chris to talk about the electronic treasury that he was dealing with this week. But when with my clients that had e-bonds that did electronic. But anyways, what you just said bears repeating. You want to explain that?
So if you're somebody that is a subchapter S partnership or limited liability company which was in business prior to 2024, you have to the rest of the year to contact through BOI FinCEN, Beneficial Ownership Network, and fill out the information, because there is a $10,000 fine if you don't. If you're a brand new limited liability company, brand new 1120S, brand new partnership, you have 90 days to contact the Beneficial Information Network of Financial Crimes Network of the Internal Revenue Service and register, or you pay $10,000. Now, that's part of what we do at EG Tax, and if you need help, call us. We will get you. You have to upload all of your ID. They want photo ID, passports, driver's license for all people that are benefiting financially as a partner or a what do they call that? An influencer.
Influencer / decision maker who's not a shareholder. Right. So it could be a spouse.
But very, very important. Okay.
Right.
Now let's do quick before we break for our little break. 8030930, 8030930, star 930 on a cell phone, and we have a text.
Yeah, it says, Esther, my wife and I alternate claiming my daughter. It was my year in 23 to claim her. Should I have claimed something for college? Because I didn't, but my current wife is saying that I should have. And so please settle the dispute.
Well, you give him some good news.
Yeah, you should have claimed the college on the 1098T. If there was college credit to be had, you should have claimed it for the first 4 years. It's the AOTC. And then after 4 years, it's lifetime. And on the state, there's also a credit for the first 4 years. Graduate school doesn't count. So good news, you need that 1098T for us to solidify this deal. But
right, and we're talking about thousands of dollars that you have coming, unless she was a fully scholarshiped student. But if you had expenses that were non-scholarship, for your daughter, and she's under the age of 23, you would have, and for the first 4 years of continuing education, you would have gotten a credit of approximately $3,000, one would assume, between the state and the federal, and so you can amend the return and get that money.
Yep.
So I hate to tell you, you were wrong. Your ex-wife was right.
Yeah, and
she won't mind hearing that.
No.
Right.
And it can, I got to tell you, it can be challenging getting that 1098T from the student. There used to be a site that we would use, but they sort of made it like an act of God to go through that site to get it. So you've got to have your daughter go to her portal at college, or it could have been mailed to her. Any other advice?
I'm Esther Gulius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We want to hear from you. Are you getting love letters? Are you frustrated? Give us a call. We're going to take a short break. We'll be back with your calls in the other side. Hey, to us, you are family, and I'm going to tell you, it can be so frustrating and you know this if you've gotten the letters, if you're getting letters from the federal government, they usually are not too many things that say, hi, we just wanted to write and make sure you're having a happy day. They can be very intimidating, and it's important that you have somebody in your corner, and that's part of what we do. And you don't have to be our client in order to call us. We are happy to help. So just to let you know, egtax.com is our website. EGTax is there to help you. We're located on Colvin in Tonawanda this time of year, and we are happy to help. Right, guys?
Yes.
All right. So I know we wanted to go to the E-bond thing. Why don't you have Chris explain what happened?
Yeah, so there was some clients that came in the other day, and Chris spent, over an hour.
2 hours. 2 hours with them. Their bonds, because somebody passed away, the paper bonds had to get converted to e-bonds because they wanted to add another person. So by doing them as e-bonds, it means the Treasury Direct is in charge of your bonds, not you. So they were worried about cashing them in because of Medicare and all the extra, this enhanced star and all that. So we're looking at everything. We go to the website, log them in, which is like trying to log in there is a pain in the butt because you click the wrong button, you get logged out again. But to find out that the Treasury Direct, automatically cash the bonds in when they are come due. And they put the money in a holding account, a 0% holding account. So it's not like you have the paper bond to remind you that you still have this. This is all electronic, and for the older people out there, I can see many of them forgetting about it, and that money just sit out there, and then I guess eventually it would go to the lost funds.
Yeah, and these folks, I know them, and the reason that we switched it to electronic is because they wanted to change the beneficiary, and so to change the beneficiary, the only way you could do it is to make them into electronic.
Yeah. So if you do have the e-bonds, make sure you have good records, keep your username and your password safe, and the 3 questions, because even when you get somebody on the phone, they ask you the 3 security questions. I've never seen that before. But make sure you have it notated and you in your system somewhere, that in your file, that you have record of it, that you still have these, because I don't want to see people just misplacing that money.
Well, that's absolutely true. And that's part of what we help you with. Give EG Tax a call. We are your family. Wanted to talk about, before we get to this text, which kind of is part of what I'm talking about here, some of the things that the Biden administration is proposing as they move forward, because in 2025, the Trump tax cuts expire. And it's very important to know what they're proposing, because it's going to affect you. So one of the things they're proposing is a raise in capital gains rate from a maximum of the most you could pay is 20% to 39.6% with a 3.8% surcharge, or 44.6% on long-term capital gains. Now, that is a 24.6% increase if you are somebody that's in the market. Wow. So that's a big thing. And then here's the other thing, which kind of ties into the text that we have. They're looking at getting rid of altogether or limiting the 1031 exchange. Oh. So if you're somebody that had rental property and you wanted to exchange it for other property, they want to eliminate the 1031 exchange or limit it to $500,000. So that goes into the text we have.
Yeah, but the text it says, Esther and gang, I'm doing a real estate exchange soon, but I never claimed depreciation. It must be a rental, on the rental. Does it matter if I didn't claim depreciation? Russ said to ask you guys.
Yes, it does matter, because it's depreciation allowed or allowable. So you're going to have to adjust the basis by the depreciation you didn't take. Now, you can let the Department of Treasury know that you are going to be putting all of the unclaimed depreciation on your tax return in the year of the exchange, and then you'll be able to get that. But yes, it's allowed or allowable. But of course, on the 1031 exchange, it's just going to adjust the basis anyway. But if they eliminate it, so you want to make sure you get this done before Congress passes this law potentially to eliminate the 1031 exchange.
Right, and
that's why I think what we do is so important is we're going to let you know what they're thinking. What they're thinking is really scary.
What were you gonna
I
say,
mean,
Chris?
really.
Right. I mean, and they already adjusted the rules of the 1031 exchanges a couple years ago. Now it is only property you can
Right.
do the exchange on. Before,
Like for like.
right, you used to be able to do a business car for a new business car.
Right, or a horse for a horse if you had thoroughbreds, right?
Correct.
I mean, but that's now gone. The only thing you can do is real estate for real estate, and they're talking about tightening that up as well. So, yeah.
Yep.
Okay, so yeah, you have to basically let the Treasury Department know that you're taking the adjustment for the depreciation that you had never done in the past, and they basically let you do it in the year of the 1031.
Smart.
Yep.
I want to go to
Right.
Polly.
Well, no, let me do this. For those of you that are getting the letters about identity theft, it's not a scam.
Nope.
I
No,
mean,
it is not.
They are absolutely not going to process your return until you contact them to give your identity, and they are sure that that's your tax return. And if you need help with that, we cannot. When I was with this gentleman the other day, because they ask you things like, how much was your Social Security, and how much did they withhold from your Social Security, and how much was your W-2 income, and he didn't understand how to find that on his tax return. So I pointed it out, and she says, I hear somebody with you. If I hear that again, I'm going to hang up the phone. So, I mean, we want to help, but we're limited as to how much we can help. But the thing is, you have to
Respond.
endeavor to get this done.
Yeah, they'll hold up all your refund now and future refunds. I know I was with somebody, he didn't have his glasses when I was pointing to it, so I wrote it on big sheets of paper so that he could see. Again, I couldn't talk,
Yep.
Yes.
It's just so frustrating because they want to make sure that it's, they'll say, I know clients will say, well, but that's what I hired you for. But they don't want to know Esther Golias's ID. They want to know your ID, So that's what's very important. So if you're getting those letters, don't panic. Give us a call. We want to help. Right?
Yep.
Definitely.
Okay. And the other thing is not only the identity letters, if you're getting a bill
Correct.
from the federal or the state, come on in.
Yeah, there's what are they?
Many times those bills are wrong or partially incorrect. So we want to help.
Correct.
All right, let's go. We got Polly. Hi, Polly. How can we help you?
Oh, hi. Oh, my. I'm laughing, sort of. 20% to 40% capital gains, if that's what they're thinking.
44.6%. 44.6.
All right. Okay. Close. That is incredibly,
All right, and think
know.
about this.
Yeah.
7 or 8% New York State.
Wow.
Right? So then you're looking at like 53% on the sale of capital assets.
We got to fund the machine. We got to pay for the machine,
So that's why I think what we do, Polly, is so important, is as they're thinking these things, I don't know if they actually have put a pencil to it. I mean, it's certainly going to raise money, but it could just completely devastate a taxpayer who maybe sold a family estate that they had inherited and without a stepped-up basis. I mean, these things can really cost people a lot of money.
Yeah. And collapse. Help collapse the system. Oh,
Right.
my. This is like really crazy.
Right.
My main question was going to be, I know a few people that they're only going to get about 100 from their tax return, and they don't want to bother. And then I'm like, I don't know, maybe that you might be in trouble if you don't. So there's that question. But I also wanted to mention, I recently went to the post office, paid cash, sent out a package, and within 30 minutes I got a text from what I thought was the post office.
Didn't
saying,
your mom get that?
send us your you got to pay 30 more cents. Send us and it's got to be credit card. And don't I like a nitwit? I go ahead and do it with me and my son's card. So yeah.
Oh, so then you were a victim of identity theft.
Yeah, I heard this. I heard this scam from somebody else because you just go to the post office and then you find out that you're short on the mailing, and so they want you to.
But you really weren't short. They just wanted your
Information.
credit card number.
More, but you got to pay. Okay, so but the thing is, in my mind, I'm like, wait a minute, I paid cash. This had to come from within the post office. But then I realized, wait a minute, it's probably from my phone. Is that's what I'm trying to say?
Geofencing.
Yep.
The geofencing, so they know your location. Yeah.
Right.
Oh,
Well,
very
Polly, we
interesting.
thank you for your input because
Oh wait,
people
answer
really
the
do have to be.
and answer the question about people that only have an incidental $100.
Well, I mean,
Like,
you know,
maybe they-
people only know what they know, and sometimes that's all they're going to get is $100, but sometimes they're getting more. You want to file. You don't have to file if you're getting money that you don't have to, if you're underneath the minimum
why don't we-
filing
Yeah,
requirement.
we'll take more about talk
And
more
we're going to
about
take a short break for the news. I'm Esther Gillius of EG Tax, 8030930, 8030930, star 930 on a cell phone. Talk to you on the other side.
We are family. I got all my sisters with me.
Hey, I'm Esther Gillius, the tax lady from EG Tax. We're talking taxes, and I want to tell you, we want to make sure that you're aware of what's coming down the pike because you want to make sure you talk to your representatives and your Congress people, because if you can't afford 53% in capital gains, I mean, that's pretty important, right?
Right.
So the thing is, ignorance is not bliss. You want to make sure that you're aware of everything. And as they make these proposals, we're going to let you know. So,
Right, and I'm sorry, I just
Yeah.
want to go back to Polly's question. So this person had a $100 refund, but what
What
if
their liability was $783?
what if they had a credit that made it a refund, or you had itemized deductions to make it a refund? That means they would have owed money, and if they don't file,
That's what I was thinking.
then they could be in trouble.
then the IRS will mail them a letter saying, "Hey, we think you owe us $607," and you'd be like, "Wait, I had a $100 refund."
Yeah, I was thinking, what if their liability, like you said, was $783? They paid in $883, and so it's $100 refund. But that's how it was generated. You know, same thing that
Right.
you were thinking.
Right, absolutely. The bottom line is taxes aren't easy, and navigating the whole tax structure, you need somebody on your side. And I think that's where we come in. We certainly want to help, and our website is egtax.com. And you know, there are a lot of seniors out there that are not electronically with it because they say that was never what happened when I was a kid, right?
Right.
And they don't want to do the electronics of the website. Well, then you can call us at 632-7886. We still answer the phone,
We do.
Right.
We
and
do.
we talk to you.
Correct.
All right.
Yeah.
The other thing that they're proposing, Biden is proposing, is the net investment income tax rate to move from 3.8% to 5%. So that would be even higher on that capital gain thing that I just told you about. So suffice it to say, they're looking for money.
Right, and that's not just for the highest tax
No.
rate either. That is anybody single over 200,000 who has capital gains, and 250 if you're married. So no doubling of the single limit there, the married couples are going to get in trouble if they have capital gains. They're going to pay a lot more in taxes.
A lot
More of the marriage penalty.
And let's face it, they're not going to, they're not just going to say, oh, that group pays. They're going to make the other groups pay too. I mean, they're not going to keep it what it was. So that should be interesting. Okay, we have a text. You want to tell our text?
Yeah, it says, what is the tax benefit for energy efficient windows and doors for this year? Thank you.
Okay, so you guys want to, it's basically 30%, but actually doors don't get much of a benefit, do they?
Doors go up to 500. The first door goes up to 250.
Right.
And then if you put in a new side door, new sliding door, something like that, it could be another 250. So up to $500 for doors.
But it's 30%, right?
30% of the cost, up to $250 per door
Right,
for outside doors.
right. And they can't be interior doors, it's got to be exterior doors. And windows, same thing, 30%.
Windows up to $600. And if you can play the game and you prepay to guarantee the price of the windows, but have some installed in 2024 and some installed in 2025 because it goes by the installation date.
So let's just say that you had $20,000 in windows that you had this year, and 30% of that is $6,000, limited to $600, right?
Yep.
So that meant that if you did it all in 1 year, all you're going to get is $600. But if you did $5,000 in year one, $5,000 in year two, $5,000 in 3, 4, you would get $2,400 rather than $600.
That's
So
right.
that's why Chris said if you can stand playing the game,
Yep.
right?
Yes.
Because it is. It's like, no, we're going to have the IRS help us with these windows, and so you spread it out over a number of years because that maximum credit is limited to $600.
Right. And then also you have to have the liability to get that credit.
Right. And explain what that means, Chris.
It
I mean,
means-
like you stub your toe, you got a liability.
Well, say you're retired and your pension is only $10,000. You're single and you have your Social Security of $20,000. You have no tax.
Right. So you're not going to get any benefit.
You're not going to get any benefit with those windows or doors.
So what can you do?
Then you take extra money out of your IRA to create a tax,
So that you get the credit.
so then you get the credit.
So this is the thing that seems counterproductive. So what we're saying, in order for you to get the credit, we want you to get taxed. But that's the only way you're going to get the credit because it only offsets tax. So you actually go and take more money out of your IRA to generate a tax so that you then get the credit to reduce the liability down to zero.
Yeah.
Because without it, you save nothing.
And the important thing about this new and improved, in my opinion, tax credit is it's not a lifetime like the other one was. And so that parlays into what Chris says. Whereas if it was a lifetime, it would have been gone the 1 year.
Right.
Yep.
And then also this
There's a lot of credits like that. Those are what they call non-refundable credits.
Right, I was just going to say this parlays into a e-car credit because you can get up to $7,500 credit, but if your taxes is only $1,000, you're only going to get $1,000 credit.
Correct.
So
What's an e-car, Chris? Well, I just want people to
an
understand.
electric car.
Vehicle, right?
Yep.
Who every time I asked it last year, I only had 3 clients that did it. Did you have anybody that did electric vehicle?
New ones, maybe about 2. I had a whole family take advantage of the used car e-car one, so they got every person got a $3,500 credit.
Right.
So,
But-
Chris, help me to understand. When you get I did the credit and I put in the VIN number, but mine was rejected because I thought it was used.
They said it was new. You
Okay.
put it in as a new car. The government has it as a used car. So that's how these computers are. It's important with the VIN number.
Because
so-
it tracks whether it's new or used.
Right,
Because
and-
the credit is dependent upon whether it's new or used.
Yep. And
Right?
yep. And well, I don't know what else I was going to say about the e-cars, but if you have them, Good for you.
Well, I mean, a lot of, I would say, and did you buy a new electric vehicle? And
The
they would
smirks.
say, do I look stupid to you?
Yes. We live in Buffalo.
Yeah,
Hello.
yeah, do I look stupid to you? Anyway, the other thing is that I think people need to understand is whenever you're dealing with finances, your income taxes play in many of those roles. Like, for instance, if you have student loan debt, the student loan debt right now, average rate is 7.1%. And you can take as a deduction up to $2,500, provided that your income is low enough, right? But many people that are incurring student loan debt, if they didn't go into debt, it would make so much more sense. The average public school right now, the private college, is $84.87 for a public versus $30,685 for a private school. So obviously, if you are somebody that doesn't want to carry student loan debt, look at public schools versus private, because the student loan debt is like carrying over a dead body year after year after year, right?
Right.
So even though you get the $2,500 maximum write-off limited to your income, if you aren't too high, it still doesn't make sense. So try not to get into student loan debt. Okay, we got a credit here, right?
A text. It says, Esther, when will the new capital gains tax change take effect?
Well, I mean, this is what they're proposing. Proposing doesn't mean anything.
Thank God.
I mean, it's not like really some guy coming over with a wedding ring saying, "Hey, baby, you want to get married?"
But
I mean,
here we
they're
go. Here we
proposing
go.
it.
Knowledge is power, and I think you started off the conversation by talk to your your congressman and talk to people and make sure your voice is heard.
Right, and that's the important thing, is that just because it's proposed doesn't mean it's going to go into effect, but usually it means that they're pointed in that direction.
Yep.
So
Yeah, ask
you
them,
want
do
to
you
make
know?
sure you talk to the powers that be, because you don't really, I don't think we want that kind of thing. The other thing that they're proposing, by the way, is a gain in corporation tax from a flat rate on the C corps from 21 to 28%. So that's a 7% increase as well on corporations.
Sounds like.
And I know you say to yourself, who cares? Well, I'm going to tell you something. When the corporation pays 7% more in taxes, guess who's going to end up eating that? The consumer.
Or how many layoffs is that going to be?
Right.
You know?
Anyway, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We'll be back on the other side with your comments, questions, and me.
We are family. I got all my sisters with
Hey,
me.
to us, you are family. I'm Esther Golias, the tax lady from EG Tax, and we want to make sure that we get you pointed in the right direction, because you are right now creating your 2025 tax return. Right? Isn't that true?
2024, yes, and 25.
Yeah, 2024,
You're right.
which
And
you're
I
doing
know,
2025.
and I know what I was gonna say about the e-car credit. If you don't have enough income, or you make too much for it, have the dealership use it as a rebate, because they can get the credit from the federal government and reduce the price of your car.
That's
So-
right, and that electric vehicle credit is fully transferable. So you can have, even though you don't have any tax liability to cover the credit with, the $7,500 should it be that, you can assign it to the dealer, who then should give you $7,500 in credit.
And then Chris and I were talking, and Esther and I were talking on the break, and the used car was limited to $25,000.
Yep.
The cost of
The
$25,000.
cost of the used car.
Yeah, yeah.
All right, want to talk again about credit card debt. If you're somebody that's carrying a bunch of credit card debt, the credit card on average debt is 27.9%. And if you have a home and you have equity in your home, you can refinance and do a home equity credit line. On average, they're 5.7%.
Yeah.
So you would save 22%. Now, Is it deductible? No. Home equity credit lines are not deductible unless it's for improvement to your personal home. But still, a 22.2% reduction in the interest rate that you're being charged is really a smart thing to do.
Yeah, and Jesse at Cross State Funding, I'm going to have him on soon. So again, Jesse at Cross State Funding, him and his team do home equity line credits, and so really a really good option, much cheaper
So
than.
I mean, if you had $20,000 in credit card debt and you moved it to equity debt, you would well on the 20,000 credit card debt, you would pay $4,440 a year. I mean, hello, you know. So, and the other thing is, you could do if you say, all right, well, I don't have a home. How about your 401k at work?
Get a loan from it. Yep.
You get a loan
And
from
then
your
pay yourself
401k,
back.
and you pay yourself back.
Correct.
So those are things that may not directly pertain to income taxes, but they pertain to finances. And a lot of people don't know, though, that their home equity credit lines are not deductible.
Yeah, and then-
unless it had to do with home improvement.
Right. And then also I was with a client that owed $19,000 to the IRS and $8,000 to New York State. And so she said, can I set up a payment plan? And you can, but the payment plans with the IRS are really costly. The failure to pay on time, the penalties are every month. And so my advice to her was to get a home equity, and no, she's not a candidate for an offer in compromise.
Because she has assets.
Yeah, and she
Right.
makes $160,000 a year. So.
Right. And you know, sometimes we just paint ourselves in a corner. I have a client I was working with the other day, and this particular person has a car that's worth $45,000, and she owes 20 on it. So she's got $25,000 in equity. But she has like $20,000 in credit card debt at this 26% rate, which is killing her. And I said, get rid of your car, get a less expensive car, take that equity and pay off your credit cards and walk in the sunshine.
Yep.
Right?
Yep.
Because it would have saved her about $800 a month in ongoing expenses. Plus, she was borrowing the money to pay this credit card. And, you know, we kind of paint ourselves in a corner. And part of what we do at EG Tax this time of year is we help people with their budgets.
Yeah,
right?
it's another set of eyes, another set of ears, another option. We just listen to this all day
And that's
long.
true. And you know, at the end, I can remember I was dealing with this one client one time. I went through line by line on his budget, and I said, "You're paying this for that. You're paying that for that. You're doing this for this. You're paying this for your, all these suggestions I made." And he said, "Wow, now I know where all my money's going." And I said, "Great. So now what are you going to do?" He said, "I'm going to do nothing. I think I'll just go do a bankruptcy. But at least now I understand." Okay. I mean, because we still love you, but
Yeah. But-
hello.
Yep,
All
we
right,
got a
and
text and a
we
call.
we got a call and a text.
Yep.
Okay.
What do you want first?
I don't care. Do the call first.
Okay, we got Al from Lancaster.
Hey, Al.
Yeah, I was wondering if you could fully explain the BIN thing. I'm very confused on that.
The BOI?
You mean the BOI?
Why?
Yeah.
Okay.
So that's beneficial ownership information that the Department of the federal government, Department of
Financial Crimes.
Financial Crimes wants to know who is the owner of these businesses, these limited liability companies, partnerships, or subchapter S corporations, and failure to provide that to them can result in a $10,000 fine.
Do I do that through you, or
Well, you
is
can
there
do
other
it through
ways
us. We're experts on it now that we found out all about it starting January 1st. We had no idea this was coming down the pike, but now that we know, you can call us. We charge $50 to do it up to 3 owners, and we will work with you, upload all of your proof of ownership, and we will file those reports for you. If you want to do it yourself, you can go to BOI FINCIN, and you can do your own report.
and the information required for that?
You need proof of ownership of your ID. And not only ownership, but people that might be influencers in your company. Specifically, they're worried about people that are doing money laundering and things of that nature. They're going after those people. So the people that are forthright and loading all this information up, I think, would be the smart people. And there is a fine up to
Well, they're
$200,000
smart, so you
if
don't pay the fine.
willfully don't submit everything.
Yeah.
So it's very serious.
It's like a mandate.
It's a mandate.
It is a mandate.
Yeah, and it's like the good guys lose because of what the bad people are doing, you know?
Will just a driver's license do that, or
Driver's
Well,
license
or-
or passport.
Yep.
But it's not
gotta be picture.
I got to tell you, it's you got to do ID verify, which is not, you don't have to do part of ID verify, which isn't it? It's not just uploading your picture.
Right,
to your
that's
driver-
true.
I mean, it can be difficult. Am I right, Chris?
Right. It is difficult.
Yep.
But people are entitled to go on BOI, FinCEN, and do it themselves. But if you need help, we're there to help you.
Yeah, that sounds good. I mean, since you say it's difficult, it's got to be difficult. So,
Well, you know,
Appre-
you have to prove who you are to the Financial Crimes Network. How's that for a lovely afternoon thing?
And it is technically a one and done type thing, but if the owners change, if your address changes, if your name changes, any type of change like that, you have 30 days to update your BOI report.
oh boy.
So, well, I think
Yeah.
But here's the thing. The whole thing is you want to be in compliance. So you don't want to be a non-compliant situation because you don't want to have them looking at you suspect. So if you need help, give EG Tax a call. Go to our website at egtax.com. You can make an appointment, and we'll be very happy to help you.
Okay, sounds good. We'll
Thanks,
do.
Al. Appreciate your phone call. All right, we got a text here.
yeah,
Jeff?
it says, how long will it take to break even to make the interest savings on the closing costs, though, if you pay off credit card debts with your equity? So they want to know how long it would take to break out
Well, I
even.
mean, if you're paying 6% on a credit on home equity, and you're paying 27% on your credit card, that's a 21% savings. So you figure on $20,000, a 21% savings, right, is times 21% is $4,200 a year in interest savings. So in 4 years, you've saved more than the principal.
Yep.
So it's a big number, and so you aren't paying that money, and that's a good thing. Not to mention how once you get rid of your credit card debt, you know, it makes your monthly expenses far more
Manageable.
reasonable. All right. The other thing is, I know that we have talked about high interest rates right now. Bread, I guess it's Bread Bank, BREID. It's an internet bank, is paying 5.25% on 1-year CDs. Alliant Bank is paying 5.15% on CDs, and Barclays Bank is paying 5%. So those are some of the highest yielding. They're moving up, by the way, on some of these interest rates. So if you're somebody that has a 1% savings account at some local bank that isn't paying you much, take a look at some of these, because you can really make a lot of money in interest. For the first time in a long time,
And
when I was
don't-
doing tax returns, I saw big interest.
And don't forget, the interest is taxable.
It is taxable.
How many people did we have that
How
just...
can I owe this money?
Yes.
Because you made $20,000 in interest.
And then I just want to say on a fun note, last night, Chris and I were at a bar watching the Bandits game, and they crushed Toronto. And so tomorrow is the second day of 3. And so go Bandits. Oh, there's another text. It says, oh boy, can you help me with this one, Chris?
Oh, it's lots of... Hi,
Hi,
Esther.
Esther.
I have a second home in southern Arizona, which is not a rented out. I'm having an
Which is rented
addition
out.
put on my house at the present time. New energy efficient windows and outside door. Can I file an Arizona state tax return for the windows and doors and mortgage interest and homeowner's insurance for this home. Thank you.
Okay, so it's a second home.
Not
It's
rented.
not rented out, so it's a second home. So the interest and dividends are interest and property taxes are deductible, limited to the $10,000 on taxes, but you cannot take the Energy Star any
Only-
energy unless it's your primary residence. So
Unless
if-
it's solar.
right. If you wanted to move to Arizona, you would be able to get your $600 credit, but I don't think it'd be worth it for $600 to move
No.
to Arizona. But you might want to, but that's the only way you're going to be able to do it.
But
Or-
it's a dry heat.
And it's a dry heat, the 110.
Or she might want to consider renting it out, and something to think about. You could get a percentage of it.
Right. Anyway, I'm Esther Golias, the tax lady. If you're getting notes, letters, bills, if you're frustrated, so are we, because we have to deal with those people too. You can give us a call at 632-7886. Until next week, I'm Esther Golias, the tax lady, with Christopher Fabian, Tiffany Fabian, and you. Thank you for listening. Talk to you later.